Hello and welcome to Crux Investor. We're going to be talking in a moment to Mark Chalmers, the CEO of Energy Fuels. We were lucky enough to catch up with Mark about a month ago, and since then people have been contacting us with questions which they'd like to ask him, so we're going to include that today. We're going to cover off the imminent Section 232 announcement, their vanadium production, the pricing in the market, and the general sentiment with regards to uranium in the market. So hello Mark, how are you?
Very good, Matt. Good to be here today.
Well, thanks for joining us again. We had a great talk a month or so ago, and the video is really well received in the marketplace. And people have been sending in questions that they'd like you to help them understand certain topics. And if we can go through those today, I'd appreciate that.
Yeah, not a problem.
Okay, so I'm going to start with the big question there, which is around the recent insider selling. People are concerned that the directors know something perhaps they don't. What happened there?
Look, we've got a lot of attention on Ben Eshleman selling shares, but it actually isn't Ben Eshleman selling the shares. Ben represents a block of about, I think it's something like 40 family members, and they all have shares that basically report up through him as a director, because he basically is part of the family, but the director for the family. And so if, for example, one of the younger kids decides he wants to sell some shares to buy a car or something and sells those shares, it reports up through Ben Eshleman. So I really want to make sure people understand that there is no real true insider selling at this point in time, and that is the case. So, you know, I hopefully that alleviates some of the concerns that insiders are selling, because we know something. You know, what we've said to the market is what we know.
Right. And were you aware of this trade coming up beforehand, or you know?
Yeah, I think I got like maybe a 24-hour notice or something that they were going to sell, but I'm also looking at it on how to better address that. You know, for the full transparency, and so people don't see it as negative.
Right, so basically people should read this as there's no reason to be concerned. You don't know anything with regards to the 232 decision.
No, absolutely not. And as I said, you know, I'm sure that some of the questions will be about 232, and I'll certainly give everybody an update of, you know, where we're at. But I think we have been very transparent to the market. So.
Okay, so we've seen a couple of press releases from yourself, and also you are recently, you know, quite aggressive in terms of positioning with regards to Russia and China. What's going on at the moment? Is there any more insight? The DOC have made their submission. The president's got 90 days. Is there any kind of insight?
Well, look, as we've reported publicly, yeah, the report is on the president's desk. He has 90 days to make a decision. Now, a decision could be giving relief, or you know, or it could be not. We think we've fought a good battle. We punched above our weight in terms of how we've communicated the national security concerns, and also I think we've communicated well that. You know, right now, approximately 70% of the newly produced uranium is coming from state-owned enterprises. So, you know, that should shock people. And, you know, we think this is right up the alley of the administration, but we don't know exactly what decision they'll make. You know, we're very positive and confident that we'll get something out of this process for the right reasons. But again, you know, I'm not Donald Trump.
If it's rejected, if you don't get something out of it, what's the plan?
Look, it would be an unfortunate outcome. You know, and as I said, I think that you know, this is right up the Trump administration's alley. You know, we consume 1/3 of the world's uranium and producing less than 1%. The state-owned enterprises are increasing. You know, the tensions with China and Russia, Kazakhstan, are growing. So, but yeah, no, I think it'd be a bit of a kick because we think it's such a outstanding petition and ideally suited for Section 232. So, but we do think the fundamentals are improving on their own in the world. And so we're not building the company around 232 only.
Are you aware of any factors, any reasons why it may be rejected? I mean, if it was rejected?
Well, look, I think, UR Energy and Energy Fuels are small companies that are basically pushing this wagon, or this wheelbarrow. There are some big companies, the utilities are huge, companies, and you get some pressures from Canada or Australia. We're up against, a pretty formidable line that may oppose this, but and I think the issue is, though, the Section 232 law, basically has to be reviewed on its merits. And as I said, we're not trying to harm our allies. We're not trying to harm the utilities, but it still goes back to what I said before. We are becoming increasingly dependent on foreign sources, and as the production is reducing in Canada and Australia, it's increasing in these other countries. So, I don't have any reason, but we've taken on a tall order here.
And I meant to ask you last time is, why did you settle on 25% as a number? Why not 50? Why not 100?
One first aspect is we settled on 25% because we need enough uranium to have some critical mass in the United States to where we have a competitive market. We didn't want this to be just geared around, one company or two companies, or, we wanted to have enough production to support 4 or 5 or 6 different producers in the United States. So it was competitive. The other thing is that we didn't want to overly burden the utilities and the nuclear industry with too much production. We wanted to allow them to benefit from certainly production from our allies, and certainly a certain amount of production from some of our foes. So the 25 was, we believed it was enough critical mass to preserve the industry in a reasonable way.
Right, and what's your thinking around how that works? Okay, that's got to be produced domestically and bought domestically, or can you go out in the spot market and supply domestically? I mean, what are the restrictions?
The devil's in the details on these things, and I know exactly how we think it could be implemented and administered. There would certainly be a period of ramp up. We want long-term contracts because we need the surety of making our investments, that we know we're going to be able to spend that money now and get some return on our investment over the course of the next few years. So there would be a ramp up.
Does that mean you can go in a spot, as in they are not obliged to take 25% day one, or does that mean that they are, but you can supply product from elsewhere?
Without getting into details, because that's really confidential of what our details are, it would be 25% of newly produced uranium in the United States. As I said, with a ramp up, with various ways to deal with things like the inventories and other uranium products, which there are many. When we're talking about uranium production, U3O8, that's just one product. You've got UF6, you've got enriched uranium, you got lowly enriched, highly enriched products. We basically have a framework to address all those issues. But the key driver is long-term contracts, ramping up production over time to ensure that we have a viable industry here in the United States that has the critical mass to make sure that we do not get caught out from a national security perspective.
Right, and who enforces that, or who monitors that?
Look, some of these things are, I guess, yet to be determined. We don't know what's in the recommendations from the Department of Commerce. If you look at the steel and aluminum, and I don't really like to use that as an analogy, once they decided they were going to, impose tariffs, and again, we're asking for quotas, It's taken a lot of time to sort out exactly how that works. That's one of the reasons that as a company with us and UR Energy, we spend a lot of time on the remedy from our perspective to make sure that whatever remedy is put in place, assuming we get one, actually achieves the objective, which is having long-term uranium production in the United States, while particularly we are a top consumer in the world.
Let's be positive. Let's say it gets signed off. Have we any sort of sense of, you talk about a ramp up, I mean, what sort of period of time are we talking about? Well, I suppose you've got to get the initial street party out of the way first, but when the dust settles, what's that look like?
It would probably take 3 to 5 years, maybe 6 years to get up to speed. The U.S. Industry is actually in better shape, in my opinion, than it was 10, 12 years ago, because we have more permitted properties than we did back 12, 13 years ago. Those that are producers or would be soon to be producers would have to compete for those contracts. And those contracts would have to be at prices high enough, again, to incentivize production. So we think that we're in better shape than most people say that we are. We get criticized routinely that, oh, you can't make 12 million pounds, you can't make 10 million pounds or something of that order. But the industry back about 4, 5, 6 years ago was doing about 5 or 6 million pounds. But a lot of projects then were just starting to spool up, like UR Energy. Lost Creek project wasn't fully permitted and able to produce 10 years ago. Nichols Ranch was not able to produce 10 years ago. UR Energy or UEC has some permitted properties that haven't produced yet. So, a lot of things changed because there was a fair amount of investment, going back on the boom of 6, 7, 8 that never was fully capitalized on.
In terms of, what this could mean for, you talk about allies and, it's the language that you use here, there's allies and foes. So do you think that the 232 is going to have an impact on your allies, like, Australia, like Namibia, well, I guess with Rossing, that's going to be a slightly different story, but Canada, for instance. Do you think there's going to be more of an emphasis on working closer with them, the US utilities working closer with them, or is it just purely on price?
Our allies are our allies, Australia and Canada, we think that those are very favorable jurisdictions to do business with. I mean, when we talk about the fair price of a pound of uranium, I mean, Tim Gitzel at Cameco, I know Tim very well. He's an outstanding individual and professional. I think he's done absolutely the right things with Cameco to position it for the future. They really need $50 plus under contract going forward to justify new production. Look, I think that the government, United States government, understands the importance of our allies. So as I said, this is not directed at them directly, but I tell people that the uranium production in Australia and Canada, if the prices stay in that $25, $30 per pound, there may not be any production in those countries or very limited production. And so they need higher prices. Cameco needs higher prices to survive and produce newly produced uranium. That's another reason why the Section 232 is important, because the current pricing is unsustainable for the United States and our allies and our, these state-owned organizations, primarily Russia and China and Kazakhstan will continue to produce, and they'll get a larger percentage of that production over time.
Okay, so you mentioned a few minutes ago utilities. It's sort of a delicate relationship you've got there with the US utility, presumably ones that run reactors or power stations. So what would the Section 232 and general price increases mean for the utilities in the marketplace? What does it mean for consumers? What's it mean for your relationship with them?
Yeah, look, we had an economist look at some different pricings to the utilities, and he came up that it would increase the cost to the average consumer residential consumer around $2.50 to $3 per year or something like that. So really low cost. I mean, compared to some of these other 232s like steel and aluminum stuff, this is a very affordable 232. I mean, the utilities, assuming we got the 25% quota, they're still going to be able to purchase their uranium 75% of the requirements from others at whatever those prices are. And I think one thing that's important when you look at the cost, people start saying, well, the cost is from $25 to $30 per pound, up to say in the 50s or 60s, it's costing us all this money. But the $25 to $30 is not the value of a pound of uranium, newly mined uranium. It's really about $60 per pound. Right. If Cameco needs north of $50 per pound, people should be comparing from $50, $55 a pound to $60 or $65 a pound. And then that $2.50 or $3 per residential customer average goes down from there. So this is where people tend to bend the truth here on, in my opinion, that the extreme cost of the Section 232. I mean, some people have said, well, our Section 232 is going to put these nuclear utilities out of business. And I honestly don't think that's the case. I mean, we closed out our contracts last year, our long-term contracts, and they were north of $60 per pound.
Wow.
They were north of $60 per pound. Now, this is an important fact that you should have, that we have the 99 commercial nuclear reactors, but we have like 80 nuclear-powered ships and submarines. So we have, if you add some of the research reactors and whatnot, we have nearly 200 reactors in the United States, 200, and we're currently producing, this year will be less than one civilian reactor's worth of fuel load. Again, that should absolutely shock people.
It's been a tough few years for everyone, but you're in a good position. You've got cash, about $50 million last time we spoke, maybe slightly under. You're America's largest producer. You've kind of got a vanadium revenue stream. You've got the cleanup services optionality there. You've been kind of cost cutting over the last few years, kind of get it back down to the bone, but to get yourself ready for when it kicks off again. So, I mean, what does that actually involve in terms of how much can you cut without affecting your ability to quickly ramp up?
Yeah, well, that's a delicate balance, Matt. I mean, we've tried to not overcut, but these projects do not sit well. They do deteriorate. And the best thing for them is to run. It's kind of like a car if you put it in your backyard, and it doesn't improve things, or a boat. You got to get out there and use them. We have cut back on our people. We've currently got about 100 employees, full-time employees, but we've got probably 20, 30 temporary employees on top of that. And we have maintained these properties in good working order. But yeah, if the gun goes off, there's a lot of work we have to do. And the first thing we have to do is start hiring people. A lot of the restart dollars will be working capital to kind of get that momentum going. There would be some new capital required, particularly with the ISR. We have to put in the well fields to get started. Additional development on our underground mines, some work at White Mesa. So we're really in a very, very good position. But there certainly would be some issues where there'd be some deterioration where we'd have to do, some improvements or upgrades to accommodate for lack of activity for the last few years in some of our properties.
But your current cash position, you're sitting on this pile of money. Is that enough to get that startup program going? You're not talking about raising capital at some point, are you? Or
I am very much a supporter of having a very strong balance sheet and a strong cash position. We probably, if the gun went off, we'd look at different ways of financing ourselves. But I want to have a very strong position. I do not want to draw our cash balances down overly low, because I don't want to be in a position for desperation financing. We just want to be very strong there. So But there's different ways of raising capital. There's probably a way of getting some short-term financing that would reduce dilution to shareholders. That would be perhaps very attractive to us because a lot of this initial these funds to get these mines going, you'd start getting a return in 12 months or 18 months. So it's kind of ideally suited for like a line of credit of some sort, potentially.
Okay. And if the price is appreciating, presumably the cost isn't too onerous.
Yeah, and if you have long-term contracts, a lot, more attractive for getting that.
How long is a long-term contract in the uranium space?
Oh, they can vary, but we're really hoping for 5 to 7 year type term contracts. So, we're really looking for longer term contracts so that as I said, we have some runway to work with.
So, I mean, just on that, so last year was a big year for spot purchase, about £88 million. What does the price need to get to before you can start getting into conversations about long-term contracts?
Look, for us, we pretty much take the same approach as Cameco, that and north of $50 per pound under contract, that starts making a difference for us. I mean, if you start looking at $40 or 35 or low 40s, it doesn't make sense. When you start looking at going forward cost, those are really certainly lower than the true cost of producing a pound of uranium. I worked for Paladin Energy for nearly 5 years and was in charge of operations for those were two. The Langer Heinrich project was an excellent project, but if you looked at the fully loaded costs with the capital, overhead costs and whatnot, I'm confident when I say we need north of $50, $60 for even the best projects fully loaded.
No contract conversations until the price moves.
Yeah. We've got to have contracts. We're not going to, we could produce, we have some projects that going forward cost, probably as low as $25, $30, $35, but that just be, we'd just be high grading the deposits without any return. Actually losing money because your fully loaded costs, if you lose, looked at the capital expended on those projects would be greater than that.
Let's talk about the duopoly that is Cameco and the Kazakhstanis. So do you think that they are controlling the pricing at the moment? Or do you, because in your press release you talk about your adversarial combatants, the Chinese and the Russians. So who's controlling the pricing at the moment? Because there's a kind of OPEC feel to this.
It's always a lot of factors. We have been competing with a lot of inventories on the market, from around the world. A lot of the producers geared up to produce more uranium than when Fukushima happened, in the protracted restart of reactors in Japan. There certainly was a fair amount of tradable material out there, and I think that certainly kept the prices down. But then I guess the renewed optimism is when these producers have pulled back their production, reduced the newly mined uranium, and this is again where Cameco's taken a real leadership position and decided that they're gonna buy rather than produce. It's a number of factors, but I think that including the Kazakhs to a certain extent, they're realizing that they cannot just pour uranium into a softer market. The Chinese are a little different. When you look at the Chinese, in Namibia with Husab and Rossing, those are high cost projects, and they will continue to be high cost projects going forward. Their approach to this whole uranium business, in my opinion, is more geared on security of supply. They want to have their own uranium production, and really, nobody else is going to run those projects in these market conditions unless you're somebody like the Chinese.
Right. So the Chinese are not impacting. They're not flooding the market. They're capturing supply for themselves.
Yeah, but it's sort of different dynamics for the Chinese. I mean, I think one of the key issues here is the Russians have a national program to support the nuclear fuel cycle from mining all the way through the various stages they need in nuclear power and selling fuel. The Chinese basically have the same thing, and so they're really focused on having those capabilities from A to Z. The United States used to be in that position. Used to be. Going back, 30 years ago or so, and they've let that deteriorate to where they no longer have that. Now, the problem with that is, there's various stages in those countries that probably are not economic, but the government thinks it's worth doing that and having those full capabilities. Meanwhile, the United States has let their capabilities deteriorate, hugely to where they're dysfunctional now, and they don't have that support. So I think these groups like the Russians and Chinese and Kazakhs are being a lot more strategic about the future than the United States has been in the last 10, 20 years.
But are they being strategic about their own needs, or are you saying they're being strategic about how it impacts your needs, the US?
The Russians are very private people. I speak Russian. I've spent a lot of time over there. But the nuclear fuel cycle is something they can be number one. And they want to be number one. And because if the US doesn't want to be number one, well, Russia wants to be number one in the nuclear fuel cycle. So, and they're on their way. They're well on their way. If they're not number one, they're certainly there or getting there and plan to continue to grow that position. So, it's complex, but I think that, when you become the king of a market, it gives you a lot of direct and indirect benefits.
But if I come back to that pricing question, which is how much control does Cameco have? How much control do the Kazakhs have? How is it influenced by the Russians? The Chinese seem to be very self-absorbed. Who controls this? Is it supply and demand, working as it should do, or are there other controls? You talked about geopolitical a second ago, and how much control do you have? Is that why you did the 232 option?
Yeah, look, I think that a number of different parties can, have a pretty substantial control in different ways. I mean, and again, look at Section 232. Two small producers file a petition, kind of turn the market upside down in the world. That's an example of two small producers, to inflict a fair amount of uncertainty into the market. I mean, certainly, if Cameco decided to go out and buy all their uranium they need for 2019, this next month or two, that's going to move the market. The Kazakh production, it's really, the uranium industry is a very small industry. At least uranium production, very small industry. So, it doesn't, you don't have to necessarily be a huge, government entity or something to move it around.
Right.
So, but actually, who is actually controlling it right now? I'd say it's a number of different people, including us.
I'd agree with that. I think that Section 232 has really shaken things up. It's put a lot of doubt in people's mind, and people are waiting around to make decisions as a result. So it's definitely punching above your weight.
Yeah, and as I said, I mean, right now the United States is producing the smallest amount of newly mined uranium that it has in like 70 years. 70 years. And that's exactly what Section 232 was put in law for. Exactly. We're a company that is going to try to punch above our weight everything we do. And part of that's my own personal competitiveness, but we're going to go for, the best returns we can for our shareholders wherever we can get them, but we're going to do it in an ethical way. We are ethical people. We're focused on delivery. We're not trying to manipulate things, unduly, but we are actually, pushing for, solid outcomes for our shareholders.
I hear you. So, but I bet Cameco wishes it had a Section 232 equivalent available to them.
And that's what's interesting with a number of the people that criticize us, particularly other producers outside of the United States, and they say, "Oh, I don't like 232." But if I'm having a beer with them and I take them over to the side, I say, "Look, if you had a Section 232, you would have filed it, wouldn't you?" And almost every single one says, "Absolutely, I would have done the same thing." So
absolutely.
The United States is in certainly a different situation than a lot of countries. I mean, you take Australia, they don't. I mean, the only nuclear power they have a research reactor. They don't have any nuclear navy. So the United States is in a very unique position, and where it stands as a superpower, and also where it gets its energy, both for the power plants and for the Navy.
Right. So let me ask you a question about pricing. Would you rather have stability in the pricing? It stayed, 60 to $80, or do you want to sort of see the peaks of 2011?
The peaks and the valleys, it gets pretty hard to plan around. I would like to see some stability. I'd like to have a significant but reasonable proportion of long-term contracts that are stable. But I wouldn't commit 100% of our sales to long-term contracts that don't have, the ability to share in some upside going forward. But I think that high volatility, it doesn't matter what business you're in, doesn't necessarily help people. So I like some stability.
And fewer players in the market as a result, I imagine.
Well, yeah, look, as I said, the uranium business is small. I mean, if you go around the world and start adding up, where the uranium production is and who's producing it, there are not many players. And but as I said, the United States and a lot of people don't understand this, that the United States was the largest producer of uranium back in the 70s and the early 80s, has a long history of production, geopolitically stable. In most cases, even very difficult to get permits, and it's litigious. So, this is a proven district that can produce and be competitive from a world standard. And, there are some areas that can produce lower, but it's competitive world standard. When I say that the true value of a pound of uranium is about $60, the United States can produce in that type of market.
So where do you think this puts exploration companies, especially those without permits yet? Do you think there's going to be more rationalization in the marketplace?
In terms of merging and mergers and all that. Look, at a lot of that has happened, but I think there's still some room for that. And I think one of the things too that's happening, there are some very exciting new discovery. Actually, the next gen Arrow deposit, very exciting new discovery. But the issues of the permits, how much time is that going to take? What is the ultimate cost of construction of those plants? The scale up of those projects, is still a bit unknown. I think, again, NextGen has got an excellent deposit, and I know Lee Curry very well. But, some of the other projects are less certain that are new. But I do think that there could be some M&A going on. I think one of the issues with these projects that are in the exploration mode or trying to get permits is they've got a long time ahead of them and a lot of money to spend. And that's a lot of dilution to shareholders, or a lot of debt, or the combination of both of those.
Yeah, I think that's wise words indeed. So it'll be a case of survival of the smartest or the fittest.
Yeah, exactly. And that goes back to why we're going to have a strong balance sheet. It's I mean, even when you look at this industry, a large percentage of projects fail. on a number of reasons, but one is technical risk. Now, I've done over a dozen projects in my life. I've never had a single one fail technically. I've had issues with uranium pricing, but I've never had a technical failure. But a lot of them will fail technically.
So I want to get onto vanadium production. You put a press release out recently. You've been doing a bit of work on your vanadium properties. Can you give us an update on those? Is everything going according to plan?
Yeah, I mean, the key issue with our vanadium production has just been the volatility in vanadium prices. They went up to nearly $30 a pound, and now they're down, $10, $11 per pound. So that's been the biggest challenge for us. But we were not expecting the volatility, but it was a little more volatile than we had expected it. We thought that it'd be a little stronger than it is right now. We are producing high quality, probably the best quality we've ever produced. We're producing, around 150,000 pounds per month, or north of that, towards 120, or just about 200, between 150 200 in that range. So it's gone very well. We're pleased with our cost structures, but the bouncing between 10 and 30 is pretty extreme. Even though vanadium prices, even a few years ago were down, $2.50, $3 per pound. So it's naturally a very volatile metal.
For sure. I think you called it a wild ride last time we spoke. But so what would the price need to get down to before you'd reconsider your vanadium projects?
Look, we haven't, informed the market exactly what our production costs are, but I can tell you that, as I said, we're pleased with what our cost structures are with our pond recovery and even with our test mining. It is our goal to be, one of the world's lowest cost producers, primary producers. I mean, Largo is down around, I think, around $4 or $5 per pound. It'll be my goal to get towards that. But I would say that as long as vanadium prices are, 10 or north of 10, we'll continue to produce from the ponds, maybe lower than that. But, so that give people sort of a general indication of where we are. But we do plan to continue to develop our vanadium production capabilities and focused on low production costs to be as sustainable as we can be in a highly volatile sector.
That's a nice generic statement, but how do we work out? How do we get a sense of how things? You got the tailings. You've got is it 3 projects?
Well, we've got probably 6 or 7 different mines, but the reason you can't just say what it costs is, a lot of these projects are uranium vanadium mines, and so it depends on what the price of uranium is. When you start looking at uranium prices of $30 per pound, you're going to be a lot more dependent on the price of vanadium. So the reason is it can be highly variable, and that's why I'm a little elusive there. Yeah. If you start looking at uranium prices of $50, $60, $65 per pound, that pays probably 60, 70% of the mining and processing. So, that's why I'm elusive. It depends really on the uranium prices largely for the long-term uranium production and economics of production from our projects going forward.
So do you think that there's going to be a vanadium deficit anytime soon? Because the price, as I say, is very volatile. It's back, up 30, back down to 10. Can you see or forecast any sense of what the future looks like on the market?
Yeah, look, everyone seems to be wrong on the vanadium, but I think the main reason that it dropped off so quickly was the China's, not, fully regulating and monitoring these rebar standards. I think when it pinched up to $30 or near $30, people thought that was going to go in an absolute way, and I don't think it did. So there hasn't been a lot of new production come online. So I think this is something that is really the volatility as of late has really been driven largely by the Chinese and how they implement this rebar standard, and also some softening of the China economy. So,
Okay.
so I don't know if that helps, but that's my main belief right now on why we've seen the volatility we have.
Okay. And with regards to toll milling, have you been approached by any of your neighbors to provide services?
Yeah, look, we've been approached by a number of different groups. They want a toll milling agreement, and I've been changing the tact on that front. I've been telling people that if they have a property that we believe may be economic in these current circumstances, we'll consider a joint venture. If they want line of sight ability to have improved sort of priority access to the mill, we'll do that on a joint venture basis. Or considered on a joint venture basis. That we do that for a couple of reasons. One, it's our mill, and a lot of these smaller companies, have market caps of 10, 20, $30 million, and we've got a $300-400 million mill. The other thing is that when we're operating in Colorado, particularly, in Utah. It's a very sensitive environment to operate in with the regulators and with the public. And if we are in joint venture and we have 51% and we're managing that joint venture, I can be assured that we're going to be doing things at the highest possible standard from an environmental perspective, a permitting perspective, and a health and safety perspective. So that's one of the reasons in the change of tack to the joint venture approach. If we actually just buy uranium ore from these smaller operators, what if they don't have all the permits? What if they do something with those projects like pump the water out of their mines when they don't have a discharge permit? So part of our approach is protecting our interests.
Okay, seems reasonable. So I did mean to ask you specifically about LaSalle, because there was a question which one of the the viewers sent in, which was what's the actual status there? I know you sent a press release out. You're quite pleased with the numbers, but can you talk specifically about LaSalle?
Yeah, well, we're still doing some of our test mining, but we're also doing work to sort of maintenance work that they're opening up various parts of the LaSalle mine, the Pandora mine. Over the Beaver mine to make sure that those mines are in good working order, have multiple areas that in a restart circumstance, we can have multiple areas that miners can work in so we can ramp up production quicker and faster. So, but we're still kind of going, step by step, cautiously, because we really need the long-term uranium contracts to give us that, to take out some of those bumps, to go into full commercial production at those sites.
Right. So you're cautiously moving forward.
Exactly. We're cautiously moving forward in the test mining and the maintenance mode of getting those mines ready for an increase into commercial production.
Right. So that says to me, what you've just talked about says to me, you've kind of got your hands full with all of the assets you currently have. Is there any intention to expand beyond the US borders? Have you identified any other targets, or is it just let's focus on what we got?
Yeah. Look, I think, as I've said, I've worked all over the world. I know most of the projects. I've operated a number of them. I'm certainly not afraid of jumping the US border, because I've spent half my career mining mines outside the United States. It's kind of my belief that if we do get relief from Section 232, that will put us in a better position to do that. If we're in production sooner, quicker, with positive cash flow, that is going to put us in a very strong position in the future for merger and acquisition activity, particularly outside of the United States.
So let's finish up on a positive note. The sentiment in the market seems to be very positive. I think nuclear is being more and more seen as a clean energy, a green energy. I think you've said that, others have said that, but there's always been some resistance in the marketplace. you've got people like Bill Gates and even Elon Musk to a degree talking about nuclear as part of the solution, along with other renewables. So what's your hope for this space over the next 12 months?
Yeah, look, I think certainly there's positive sentiment coming in and from Elon Musk and Bill Gates. I mean, the people listen to them and follow them. So I do think there is a reemergence and a recommitment of a number of countries and political leaders and private industry leaders that are basically supporting and again continuing to endorse the importance of nuclear power in the world. And I think renewables are great. I think that but they have their restrictions. They're making great strides. But if you're really serious about global emissions and global warming, but particularly global emissions, you cannot get there with certainty without nuclear power as a significant component of that. But with like all power sources and stuff, it's a mixture, and it depends on where you're at and how many people you're trying to supply electricity to. The size of the populations. There's a number of variables, and you need to look at this objectively to come up with the correct mix for the circumstances at the time, and evolve as new technology emerges. Right. So I think that the next year or two is going to continue to improve, even without relief under Section 232. As I said earlier, the world market is improving. We were just tired of waiting. And we had this Section 232, and we elected to submit the petition. And I have no regrets for doing that.
Well, it will be interesting to see. So that we've got 80, 90 days to go. So it's just been submitted by the DOC. Is that right?
Yeah, and look, is it 80 or 90, or is it 5, or is it 1? We don't know. We don't know how long it will take for a decision. As I said, we believe we've done the right thing. We believe that we've got a good chance of relief. We think very confident, but we don't know. And there's a range of possibilities here that we're waiting to get more clarity on.
Mark, thanks very much for going through that in detail. Some of those questions, like I say, are from the viewers and fans of Energy Fuels. So thanks for answering those. But it sounds like you are moving ahead. Obviously, 232, will happen one way or the other. But the market seems to be growing, and that's good for Energy Fuels investors and potential investors.
Yeah, thank you, Matt. And we're here for the long term. And as I said, I want this to be the star performer in the sector in the world.
I appreciate your time. Thanks, Mark. We'll catch up with you again real soon. Thank you.
Okay, thank you, Matt. Bye.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.